Hello guys, and welcome to my YouTube channel today. In today's video, I want to share with you an analysis I made yesterday. That made me over $600 yesterday on Volatility 50 index. Unfortunately, the environment wasn't conducive enough for me where I was to do a recording of the analysis. I would have done that and would have shown you the trade. I was showing you how it went while I was placing the trade. But I can still go back to where I noticed the setup and how it happened, so that you can also share with me, or you can also learn how I did it. Perhaps you can apply it to your own analysis, how your own skills, your own ways of analyzing the market. You can learn one or two things from it. So what I actually did was to go to the weekly time frame like this, and on the weekly time frame you can see that Volatility 50 index is bearish. You can see the series of highs and lower highs. This is low, lower low. So we know it is bearish, and we are even expecting, based on it is in a bearish movement. I believe the price will go down. Will still have to go down and break this structure right here. All right, so that's only what I actually saw on the weekly time frame. So what I did, the next thing was to go to the daily time frame. And on the daily time frame, what did I see, guys? I noticed this high here. I noticed this high here and this high here. So what I did was to apply my Fibonacci retracement, because I had done this previously in some day before now. I've been trying to check where Volatility 50 usually reverse using the Fibonacci retracement tool. So I know it usually reverses around 61.8. So as you can see now, like I told you in my previous videos, that the Fibonacci retracement tool can help you to determine high probability zones, where market might have to reverse, or where there will be turning points in the market. So when I used this tool, I discovered that price came down. One moment please. Price came here, then reversed and got to this 61.8 level before reversing. From what I told you in my previous video, I told you anywhere above 50 is good. Anywhere above 50 is good, but if it gets to 61.8, it's even better. So even if the price had reversed at 50, it would have been good, guys. All right, so I took note of that. Then I went down to a lower time frame. I went down to the 4-hourly time frame. On the 4-hourly time frame, what I saw was that the market, now you can see it, there was a double top here. A double top formed here. Sorry, let me use something else. There was a double top here. You can see the first and the second top right there, and the market, from the look of things, would reverse. If we use the Fibonacci retracement tool, you will see that the market will be coming up. Let me set it work properly. Sorry. You can see now I expect the market to come up to this level, here, somewhere here like this. This is where I expect the market to come up, and before it reverses. Why am I even expecting the market to come up? Because of what I'm seeing down here, guys. What I'm seeing down here, you see, this is what is happening. The market is trying to form hold on. The market is trying to form an inverse head and shoulders pattern. See, this is the left shoulder, this is the head. It's going to form the right shoulder, then come up here to reverse, before it will reverse to go downwards. Mind you, on the weekly time frame, the market is supposed to go down. Is in a bearish movement. All right, so bearish trend. So this is what I'm expecting. I expect the market to, after forming the right shoulder, to come up here before thinking of reversing, based on what we've seen on the with the Fibonacci retracement tool, guys. All right, so what I did was to then go down to the 1 hourly time frame, guys. So on the 1 hourly time frame, I also brought out my tool, the Fibonacci tool, dragged it down, guys. All right, so you can see the market did not reverse until it got to this level 61.8 here. Reversed the first time, then the second time it went above it, then but still came back and formed a double bottom, a double top here. You can see there's a double top here. There's a double top there. All right, so when I noticed that the market has formed a double top, and since it is forming on the premium zone, this is premium zone, and I remember I told you when we notice a reversal pattern in the premium zone that we should expect the market to sell down to the discount zone. So all I had to do was to go down to a lower time frame to find my entry, guys. So I went to the 15 minutes time frame, and on the 15 minutes time frame, one moment please, I have to remove this Fibonacci tool. All right, so this is the 15-minute time frame. So on the 15-minute time frame, I had to pull out the Fibonacci tool again. I placed it at the top of this eye. Then I dragged it down to see where to reverse. You see, the reversal, the market started reversing seriously when it got to this same level, this same 61.8 level, guys. That is where it formed a double top. I think that should be a double top there. Let me see. Let me expand it. Sorry, zoom in. Look at it here. It formed a double top. It formed a double top, and that is a reversal pattern still on this same level, 61.8. So when I saw this, I knew the market was actually going to sell, and it is a 15-minute time frame. So what I did was I still had to go down because I prefer going much lower. It's better if you can refine to a much lower time frame before you to get the better entry. So what I did was to go down to the 5-minute time frame, guys. On the 5-minute time frame, what I saw, one moment please. Okay, here is the double top we saw. Okay, here's the double top we saw on the 15-minute time frame. So on the 5-minute time frame, all I needed was to wait for the market to come down and break this neckline. Then after breaking the neckline, it retests the neckline, then sell, and that was what happened. So when the market retested, broke this neckline, then retested it, I sold it. So I entered the sell, and it sold, and I targeted this level in my first take profit, then targeted this in my as my second take profit, guys. So that is how I had to analyze the market that yesterday. So on getting to this point, I also had to draw my I brought out the Fibonacci tool to draw to see. Mind you, all this while I'm using the Fibonacci tool to draw. So when the market got to this point, see what I did. At this point, I had to bring out my Fibonacci tool because since I knew it was going to sell, I wanted to see how long it will want to sell, since we are expecting market to reverse at 61.8 or 50. So I had to bring out my Fibonacci tool to measure. This time I'm dragging from the bottom to the top because the price was buying up to that level. So when I got to after placing this Fibonacci tool, I noticed that the 61.8 level is right here. Is here. So I expected the market, and you see the level is where is a resistance zone. Sorry, is a support. So I expected the market to come to this level, but unfortunately the market did not come to get to that level, did not get to that price level. So what I noticed was that the market started developing. Let me remove this too, please. The market started creating a kind of a pullback. Sorry. So the market created a sort of a pullback here at this point. You see, when it got to this point, it pulled back. So it was like maybe it wants to create a double bottom, but it did not. You see, it got to this place. When it got here, let me zoom in a little, please. When it got here, one moment, please. This tool is not functioning as I wanted to. All right, so it reversed, then got down to this level. So you can see it formed a double bottom here, then went up. That's when I knew, I suspected it's going to form an inverse head and shoulders pattern to go back up. Mind you, the market is supposed to go back up on the 4-hourly time frame. We notice the market is supposed to go back up to fill that fair value gap at the top. So you see, when I noticed this, this was a left shoulder, and this was the head, and the right shoulder was going to be formed, and we will have to wait for the neckline to be broken and retested. So I had to wait for this neckline here to be broken. So it was broken, and you can see retested. After it was retested, the market flew up to this extent, guys. See, my target was this level. Actually, my target was this level, this high here. So I took my profit here, but it swept these points, took liquidity, went up to this level and started reversing again. So guys, what am I trying to do? What am I trying to show you in this video? What I'm trying to show you is that those things I mentioned in my previous videos, marking using the Fibonacci tool, marking out zones, they are really working. Only the Fibonacci tool alone can make you good money if you know how to use it. And you must be able to identify highs and lows, like swing points in the market. You must be able to understand market structure first, then apply this Fibonacci retracement tool. And also you need to understand that this Fibonacci tool, these levels, they vary from market to market. There are markets that reverse exactly at 50. That's the equilibrium position. They start reversing. While there are also markets that reverse at 61.8. So just know that once, if you just test it in different markets and take note of where they usually reverse, and then use it as your own, as a confluence to your strategy. Guys. Then also for this one, now look at the market went up here. When the market went up there, up to that point, what I did was to bring out this to draw to see its reversal, because you can be following market back to back, guys, with this Fibonacci strategy tool. Once I noticed the market has formed a double top here, and this is the neckline. It has broken the neckline. See, market came here. I was expecting the market to come down to this 61.8 level, but the market did not come down to this level. So it reversed, and even after reversing, you see, it did not break structure here. You see, so it came down and went up again, then still came down up to this level. So I still expect the market to come down to the 61.8 before going back up to sweep all the liquidities around this level here, guys. So that is just it. Please, I know I might be making some mistakes while I am talking and breaking, but if you listen carefully, I believe you will get something from it. You learn at least one or two things from what I've just analyzed, what I've just shown you guys. First thing, you go to the higher time frame to see the overall trend of the market. Then I went down to the daily time frame. I started from the weekly time frame, then I went to the daily time frame, and also used my Fibonacci tool to check the where the market will reverse, the level the market reverses. Then I went to the 4-hourly time frame and noticed the inverse head and shoulders pattern, and I also I noticed the fair value gap that the price might want to target, and that fair value gap is where we have a 61.8. So it's a very high possibility probability setup. If we are swing traders, I would go in for a long buy, and it will buy for more than 3 days before it gets to that level. So that's 61.8 level on the 4-hourly time frame, because of the fair value gap that is there. It has to go there to fill the inefficiency in the market. Then I went to the 1-hourly time frame still. So you just follow it up. Then you notice even on this 5-minute time frame, if you look at this, you will notice that there was a pattern that was formed there. It's a pattern that was formed here, guys. A pattern was formed at this point that also added to the confirmation that the market was going to sell. This is an ascending wedge pattern, guys, to confirm that there was going to be a sell-off. So the market broke out and retested that level, that the supportive trend line that formed the wedge before falling, or before it started selling down, guys. So all these little things, they are things that give us a kind of confidence in our setups, so that we can place trade and have a peace of mind, guys. So I wouldn't want to prolong this video anymore. Please don't forget to subscribe and like the video. Encourage me to do more, guys. Peace out.